Hello everyone. Today we start, actually we continue with the previous topic, that was topic 4, value added tax. So this is the second part of the previous topic. And you know that in our previous first part of value added tax, we cover 4 learning outcomes. All right, so we cover about introductions. In introductions, we studied about what is the meaning of value added tax, and it's also implemented for the local companies and the foreign companies. But of course, foreign companies are subject to the FCWT, which is foreign contractor withholding tax. And in the second learning outcome, we discuss about the taxpayers, who could be a taxpayer in subject to the value added tax. And third thing, we discuss about the tax exempt, so which is learning outcome 3. In tax exempt, we studied about two different kinds of tax exempt. So first thing, tax exempt, when you need to declare the the services, that goods and services that you are provided, in order to get some exemptions. And in the second part of learning outcome 3 was you are not required to declare any kinds of goods and services, and those goods and services are exempted, right, to pay for value added tax, right. And in the fourth learning outcome, we study about taxable goods and services. There are certain list of goods and services, like around 6 goods, taxable goods, and nearly 7 to 8 are taxable services. All right. So that's all about the part 1 that we studied in the last session. So now we move on to the next learning outcome, which is learning outcome 5. And this learning outcome 5 is about tax rate. So in this session, we're gonna learn 4 learning outcomes: learning outcome 5, 6, 7, and 8. So in learning outcome 5, we will discuss about tax rates, which is divided into 3 different categories: 0%, 5%, and 10%. And we will also learn about that on which kinds of goods and services is a 0% tax, and which types of goods and services 5% or 10%. And 6 learning outcomes, we will learn about calculations, how we're going to calculate a value added tax. But of course, we focus more on the theoreticals, because your tutor, Mr. Thumb, will focus more on the numbers or numerical part. So in this learning outcome 6, we will learn about the 2 different methods, so which is direct method and credit method. So another name of credit method is a deduction method. So we also call it deduction method. And how, of course, how we calculate what formulas for a direct method and which formula for credit method. Right. So these 2 things we're gonna do in relation to learning outcome 6. And then we will move on to learning outcome 7, which is about tax refunds, which kinds of businesses or which kinds of particular services can get tax refund in relation of value added tax. And the last thing, we will discuss about the penalties and some fines. If individual or household or any kinds of business do not make a payments for value added tax to the governments, so what will be the penalties? The penalties are like 0.3% per day, and which will be estimated over the due taxable amounts, all right, or tax payable amounts. Okay, so let's start with the tax rates. Okay, so learning outcome 5 is about tax rates. Tax rates. So as I mentioned, that these tax rates are divided into 3 categories. Right? So let's start with the 0%. Which types of goods and services, or which kind of businesses don't have to pay tax or 0% tax implement on those kind of services, right? So the first thing is, of course, exported goods and services, right? You know that we also previously discussed a lot about exporting items to the foreign countries, so we don't have to pay any kinds of value-added tax, right? And second thing is the second kinds of services involve the construction and installation, which belongs to or which involve in operating overseas. Any kinds of construction which involve in operating for overseas things or overseas business. Same thing here, any kinds of installation in relation of operating and which operated overseas. So on that kind of services, we don't have to pay value-added tax, right? And next thing is the international transportations. You involve in any kinds of transportations, that's at international level. So whatever services involved in that, you don't have to pay value-added tax for that transportation. Of course, it's same like as the overseas things that we discussed before, right? And besides all these things, and we have some other kinds of services, goods or services on which we don't have to pay value-added tax, right? So what these are? These are belongs to any kinds of items which comes under learning outcome 3A, right? So like in the previous lecture, the part 1, you can go and check which kinds of goods and services comes in 3A, not 3B. 3A means the goods and services you have to declare, right? You have to declare, not undeclared or non-declared items. That's not considered here, right? So on these kinds of things, you don't have to pay any kinds of tax or 0% tax implements on that kind of things. Okay, so now we move on to the next rate, which is the let's move on to the next page. So tax rates. So tax rates, now next tax rate is 5%. Right? So here we're going to discuss about different kinds of goods and services on which we have tax rates. Okay. These tax rates apply for those essential goods and services. Essential goods and services. And these essential goods and services involve all these kinds of items that we're going to discuss now. Right? Okay. So the first one is a supply of clean water for household and household and manufacturing purposes, right? Manufacturing purposes or manufacturing consumptions, right? But remember, in this supply of water, uh, do not involve a bottling, right? If any kinds of bottled water or water in a particular package, right? So um, if we are not providing the water which is not in a pack or in the bottles, those kinds of water, we have a 5% tax rate. So let me write down here, except bottling, right? Except uh, bottling or bottled water. Right? Next is the any kinds of or usage for fertilizing fertilizings for livestock, for crops. So any kinds of ore usage. So ore usage means any kinds of material which comes through the natural occurring, right? So that's the meaning of that's kind of ore. So any kinds of natural materials which has come from the natural occurring, that material used for fertilizing livestock or crops, of course we don't have to pay value added tax. Next one is the digging and plugging. Related to maybe some canals, right? Any kinds of digging and plugging or dragging related to canals or any kinds of things which is comes under the canals or any kinds of not really rivers, so which is different from the canals, so which is comes under the same categories of canals. We don't have to, I mean, we have to pay only 5% tax on it. Next one is the planting, raising, okay, any kinds of planting, raisings, pest control of crops, or any kinds of preserving agricultural products, only 5% tax rates will implement on those kinds of activity which is involved in uh, value added, right? Next one is um, any other kinds of products of cultivations, right? Any kinds of product which is involved in cultivations, or any kinds of uh, raw foods, or any kinds of product which belongs to raw foods too, right? So all these kind of items, we will pay only 5% tax. Next one is sugar, right? Or uh, and manufacturing involved in sugar products, sugar related product, sugar related products. So means sugar consumptions in that product is much more high. So I think it is like around more than 70 to 80% involved in that particular sugar. So it's kind of different types of things that comes under the same umbrella of the sugar items, like as jaggeries. I don't know, probably you know this one or not, or any kinds of sweets which involve a high amount of sugars. Only 5% tax rates will apply on it, right? Any other kinds of uh, product from jute, right? It's kind of also fabric things. Jute, um, bamboo, and coconut fiber, right? So anything's involved in such kinds of things, we don't have to pay. Uh, we have to pay only 5% value added tax. Next one is the, so I'm writing here. Next one is medical equipments, medical equipments, any kinds of things which that belongs to that medical things. We will pay 5% tax. Could be a mask, could be a bandage, could be a ventilators or any other kinds of equipments. Anything is involved, right? Next one is the uh, any kinds of aids used for aids for teaching, studying, right? Teaching, studyings, or maybe cultural activities. And besides that, of course, sports activities, right? On all these kinds of services, we will pay only 5% tax. And the last one is the any other kinds of services which belongs to scientific. Scientific services, right? So all these kinds of services, probably goods or services, we're gonna pay simply 5% tax, right? So that's all about the tax rates for 5% tax rate, which for these kinds of goods and services. Now move on to the next one, which is the 10%. So tax rates, which is 10%, right? 10% tax rates is quite straightforward. So 10% tax rates apply for those goods and services which do not come under 0% and 5%. right? Which are not subject to 0% and 5%. Then for those kinds of goods and services, 10% value added tax rates apply. Right? So there is, of course, there is no any particular list on it, right? Okay. Uh, for business establishment, so but there is some exception here, right? Exception, sorry. So there is a one exception here. This, as per this exception, 10% tax rate do not apply. So the exception is that 10% uh, do not apply for business establishment. Right. Business establishments. So we have different tax rates that we will study in our next learning outcome 6, when we learn about the two different methods, right? So different tax rates apply. In addition, those kinds of services which belongs to business establishment, these services need to disclose separately. All right. So any kinds of goods and services which belongs to the business establishments, 10% tax rate do not apply on it. So it has a different kinds of tax rates apply that we will have a look. We call it deemed tax rate. So let me write down here, do not apply. So which apply, we call it deemed, right? So deemed tax rates. So these deemed tax rates, we will have a look in our next part. So deemed tax rates apply on it, not this 10%, and which has, I guess it's 1%, 5%, and 2%. Right. So we will have a look for these deemed tax rates in learning outcome 6. So that's all about tax rate belongs to, I mean, which is 10%, right? So that's all about learning outcome 5. Now we move on to learning outcome 6, which is about tax calculations using two different methods, right? So I give you a very quick view over the learning outcome 6. So let me write first, and then I will give you a quick view. So topic 4, learning outcome 6. So learning outcome 6 is so methods for calculating value added tax, right? Okay, so we have two methods, as I mentioned before. So in these two methods, we have a direct method and a deduction method. So we also call it credit method. So basically, direct method apply to any kinds of new establishments and any kinds of foreign businesses, right? So here is a definition of foreign businesses. For foreign businesses are those businesses on which Vietnamese regime, in relation of accounting, in relation of invoices, or in relation of any other policy and procedures, Vietnamese regime do not applicable, right? So we call them foreign businesses, right? And for credit methods, any kinds of businesses, all right, which comes under the Vietnamese regimes in relation of invoices or in relation of any kinds of accounting, right? Accounting activities could be accounting standard, which is a Vietnamese accounting standard, right? So that's kind of businesses we apply credit methods, but we have exemptions for credit methods. So means we will not apply credit method all the times, right? Uh, the criteria for that kind of businesses is that if any kinds of business uh, which turnover is uh, I think below 300, no, any kinds of business uh, is uh, any kinds of business has a less than 1 billion Vietnam dong turnover, and that business is a newly established, right? So either business can be newly established or any kinds of Vietnamese business, not the foreign, and the business has a less than 1 billion Vietnam dong turnover, of course, per year. On those kind of businesses, credit method do not implement, right? No matter you meet all the requirements to apply credit methods, still credit method do not applicable in that situation. So of course we will apply direct method in that situation. All right. So that's the overview. All right. And indirect method. So we have a calculation. So we have two different kinds of calculation. So first calculation is about for the items, which is basically belongs to the precious metals. Any kinds of activities which involve in any kinds of goods and services involved in a precious metals things. Precious metal could be golds and could be silver or any other kinds of metals. Besides that, some kinds of gems and stones. So all these kinds of items, we have a separate way to calculating tax rates, of course, value-added tax. And second calculation also involved in direct method is uh, the normal estimation, right, for newly established business, right? And in this case, uh, we have to apply deemed tax rates, so that I explained you in the previously. And that's all about the direct tax. And then we will later on we will move to the credit method or deduction method, so which is quite straightforward, which is output VAT minus input VAT, whatever amount is left. So we will have to pay that tax, right? Okay. So let's start with the methods. So these methods involve direct method, right? Direct method and credit method. Again, as I said, that's another name of credit method. We also call it uh, deduction method, right? Because we're going to deduct the input tax in that items, right? Okay. So now direct method. So we will talk about applicable. So applicable, right? So for direct method, it's for newly established business and any kinds of foreign organizations. Foreign organizations. And could be foreign organizations or any kinds of foreign individuals, right? The meaning of foreign organization or foreign individual means uh, Vietnamese regime of invoices or accounting. All right. Accounting here, accounting means VAS, Vietnamese Accounting Standard. All right. Do not apply. All right. That's the meaning of a foreign organization or any kinds of individuals. A newly established business, any kind of foreign business, uh, uh, we apply direct method to estimate the tax value or the tax payable, right? For credit method, for credit method, uh, we have uh, any fully established business on which Vietnamese regime in relation of invoices, accounting, or any other activities apply. Right? Of course, mainly the Vietnamese companies. Right? Uh, and of course, these kinds of businesses, fully established businesses, they are registered. Right? Right? Registered. Right? So that's kind of businesses credit method will apply. Right? Now we move on to the estimation, how we gonna calculate, so which means the formula. So let's start with the um, formula for um direct method. Direct method. Right? Formulas for direct method. So of course we're gonna calculate value tax payable. So we have two formulas here. Value added tax bill. So first one is related to the activities of which activity uh, activity of trading in precious precious metals, which is golds and silvers, any kinds of stones. All right. So uh, we're gonna estimate value added tax payable for those kinds of activities, right? So we have value added tax payable. So payment price of goods and services sold, right? Minus payment price of goods and services uh, purchased, right? once we subtracting purchase from sold, then we're gonna multiply by applicable tax rates. So whatever amounts we got it, that will be payable in relation of precious metals or any kinds of stones and things, right? Now, second formula, of course, involve which comes under direct method. Second for so foreign businesses, right? Foreign businesses, right? So in foreign businesses, we have value added tax payable. So in this one, we have um, turnover, whatever is the turnover, because it's a newly established business. So turnover of the business, all right? Multiply by deemed tax rates, right? So deemed tax rates. So deemed tax rates here. So deemed tax rates, we have 4 categories, right? So one is a first 1%. Second one is the 2%, then 5%, and 3%, right? Deemed tax rates. So first percent for any kinds of businesses which involve in commerce, any kinds of commerce business. Second, which is 5%, is any kinds of business which belongs to construction, so any kinds of construction work, right? Construction work. Third one is the production and transportations. Production and transportations. And whatever is left, that comes here, others. Is it 2%? So these are the basically kind of goods and services or any kinds of things comes under the categories of deemed tax rates, all right? I think one thing I forgot to cover in the previous slides, uh, we talked about direct and credit method, right? One thing I forgot to explain you that if any business, if any new establishments business which turnover is less than below 1 billion Vietnam dong. If any kinds of business which turnover is less than 1 billion Vietnam dong, on that kind of business, uh, we will apply direct method, right? Direct method. We implement direct method. Uh, so no matter meet the requirements of credit method. All right. So any kinds of business which uh, has a less than 1 billion Vietnam dong turnover, then of course we apply direct method, right? No matter that's meet the requirements of credit method, even though that kind of business meet the requirements, which is of course here, which is here, right? Which is here. No matter that's meet the requirements of that business, still we will apply direct method in that particular situations, right? So that's all about estimating, the exemptions to apply direct method, right? And we also, of course, we also finished the estimation part for direct method. So now we move on to the calculation of calculating credit method. Or formula of credit method. So the formula is, so we have only one formula, value added tax payable. So the formula is output VAT minus input VAT, right? Input VAT creditable input VAT, right? Now, what does it mean, output and input, right? So let me explain you output and inputs. Output. Output, in simple words, output VAT means the VAT we pay at the time of selling, right? Or VAT at the time of selling, right? VAT at the time of selling, right? And input means VAT, of course, paying at the time of buying, all right? At the time of buying. Okay, so let me give you one examples to understand how much will be VAT using a credit method. So, for example, company purchased, let's say, $10,000 supplies, right? $10,000 supply, and at that time, company was paying. It's a purchase, right? So company was paying, for example, I don't know, let's say 10%. Keep it simple, 10% VAT, right? And then of course, company bought the supplies. Company gonna process it to make it product, and then company will sell it, right? And company will sell it. So let's say company is selling at $15,000, right? As the supplies become a product, and of course at that time tax rate is 10%, right? So what will be the tax payable in that situation? So first thing, we need a output. So output is 10% of of at the time of sellings, right? So at the time of selling, VAT is 1500, right? So 1500 is output, right? And input is VAT at the time of buying. At the time of buying is 10% is 1000. That is input, right? So uh, so VAT payable. So VAT payable will be 500. Right? That's the way of applying a credit method. So by using this credit methods, companies are involved in estimating the VAT. But keep in your mind, it's a VAT. We haven't estimated our tax refunds or some kinds of exemptions or some kinds of deductions that also belongs to the value-added tax, right? So that's all about credit method. Now we move on to the next one, next learning outcome. So learning outcome 6 is finished. Now move on to learning outcome 7. For learning outcome 7. So learning outcome 7 is a tax refund. So which kinds of businesses or which kinds of goods and services or in which you can get some kinds of tax refunds. So the first one is any kinds of new establishments, new established business which uh, hasn't started operating. Right. So they haven't involved in any kinds of operating, uh, can get a tax refunds. Right. Next one is input VAT refundable uh, for exported goods and services which are above or exceed uh, 300 million Vietnam dong per month. Right? So any kinds of business per month is exporting minimum 300 million Vietnam dong goods. So for those kinds of businesses, we can get refund for input VAT. Right? Next is the any kinds of uh, input tax involved in any kinds of ownership of assets transferred. So let's say we took any kinds of services from some professionals. They're gonna charge. So let's say solicitors. So we took some services from solicitors, and those advocates or solicitors they're gonna charge VAT. So of course, it's called input VAT for us because we purchase the services. So that's kind of input VAT we can refunds. But again, in relation of assets transfer from one person to another person, right? Because we need some documentation, there's some kinds of legal formalities, so we have to take services from those professionals, right? Next one is okay. So I think this one is very normal. We also do that. So any kinds of foreigner, any kinds of any foreigner or any Vietnamese who live outside, right? Who live outside, and that's Vietnamese or foreigner. That Vietnamese or foreigner uh, purchase goods and services in Vietnam but consume in foreign countries, right? Um, use outside Vietnam. All right. So let's say me, I purchase one mobile phone. Right. So and of course I'm paying VAT. So this is called input VAT. Right. So I'm paying VAT. So when I'm leaving this country, because I'm bring that mobile phone back, I don't live here. I bring mobile back to my country. Or any other country, but I'm not consuming or I'm not using permanently or I'm not living permanently in Vietnam. So I'm living, so I can claim that or that input VAT at customs. Right? Of course, on the airport we have a custom department, so we can go to custom department and we can claim that. Right. So same with Vietnamese who do not live in Vietnam, live in foreign country, bought any kinds of items on which that Vietnamese is paying VAT, input VAT, that can claim. Yes, of course, we're gonna claim input um, VAT for those items on which we are paying a heavy input, right? Last time I was reading one news that the news was about one foreigners. I don't know which country. I don't remember which country he was from. He bought some expensive watch like his Rolex from Korea, South Korea, and then he bring that Rolex back to his country. And of course, he's paying a huge VAT. So let's say if the Rolex price is $50,000, I guess. So 10%, let's say VAT input VAT is a 10%. So he's paying 5%, 5,000 input VAT in Korea. So he's bring there's no any problem to claim that money back. But what he was doing, he was trying to he has a 2 or 3 different invoices, fake invoices, right? So I don't know how he got that fake invoices. So he tried to claim the products again and again using their invoices. So again, custom caught him and then took some strict action. But anyway, the idea is that yes, most of us we do that. We go to foreign country and we purchase something in foreign country, and when we bring product back to our our country using that legal invoice, we can claim that money back. So exactly same thing with the tax refunds here. Many Vietnamese they go to Singapore or Korea for tour and travel, and then when they come back, they claim exactly the same thing. Tax refunds for input VAT. Right. Next one is any kinds of input VAT we pay for goods and services, right? But those goods and services not for individual consumptions or not for personal consumptions. That's or not for business purpose. So that's input VAT for goods and services. Of course, that goods and services for charity. All right. So let's say I purchase any kinds of things for a charity purpose. So let's say a table or any other things, and then I'm paying value added tax on that table, and I'm going to donate that table to the charitable trust or any other things, any other places, so I can claim that VAT back. But of course, when I am donating that table to any kinds of maybe pagodas, temples, or any other kind of charitable trust, so when I will donate them, of course, I need to get some receipts, because normally happen in charity, in many charity organization, whenever you donate anything to them, they're going to make a receipts by your name or your IDs and all these type of things. So you have a kinds of valid evidence that you donated that goods and services to that charitable organization, and whatever VAT you have paid to acquire that particular goods and service, you can claim that VAT back. All right. And the last one is the uh, goods and services is consumed by any foreign diplomats in Vietnam. Right? Right. So probably foreign diplomats could be from Korea, could be from Japan, or could be from US, Australia. So if they acquire any kinds of goods and services in Vietnam, they can claim for input VAT. Right. Of course, tax refunds for input VAT. So remember, obviously we can get uh, uh, claim for input VAT, not for output VAT, because seller never pay output VAT from his or her pockets. So consumer, they have to pay. So let's say I go to supermarkets, or being a consumer, I have to pay VAT, but supermarkets are not paying VAT. I am paying. All right. So from my point of view, it's a input VAT, and from supermarkets point of view, that's output VAT. So means on output selling, you don't pay VAT. So buyer pay VAT. This is called inputs, right? But of course, companies or supermarkets, or that's also buyer, because they buy supplies from outside, right? And then they have to pay VAT on that, right? So that's all about um, tax refunds. Now we move on to the last uh, learning outcome, which is penalty. So next is the penalties. How are we going to estimate the penalties? So now what does it mean, penalties here? So of course, penalties means if you do not make up payments for your value added tax on the due date. So whatever is your value added tax is payable on due date, but you don't pay that. So in that case, if you are making a late payments, you have to give some penalties. So how we estimate the penalties? So the way to estimating penalty is uh, value added tax payable. All right. So let's say it's due. So whatever uh, plus 0.03% of VAT payable each day. each day of late payments. Right. So let's say my VAT payable is $500, right? Plus, and uh, I did not uh, pay. Uh, I'm late, 1 day late, right? So 1 day late. So it will be 500, 500 multiplied by 0.03%, right? So that's for my 1 day payments, whatever is that, right? If I'm 2 days late, so another day I don't pay two, right? So which means this amount, which is here, this is valid tax payable, plus again this amount multiplied by 0.03%, right? And then I got this number, right? So it's we'll keep doing that. So it depends how many days we are not paying our value-added tax, right? So that's all about the penalties. Okay, so that's all about uh, learning outcome 7. So I forgot one more learning outcome to explain. That learning outcome is about uh, declaration and a submission, submit a text file in relation to VAT. So that's learning outcome 8. So that's number 8. So this one is about tax declaration and tax submission. So in this tax declaration and submission, uh, we're gonna look at uh, 3 things. So first thing we have a look is about dates. So what is a time date, or what is a time period? So the time period is normally, it's a, so time to pay VAT or time to submit a tax file in relation of value added tax. So that's mainly 20th of the following month, right? Following month, right? Following month, right? Following month. So let's say time period finish at the end of 31st of March. So 20th of April, right, is the submission deadline to submit tax file return, right? But of course, this date is not applicable for all kinds of businesses. So any kinds of business any kinds of business um, which turnover which turnover is less than uh, 50 billion Vietnam dong. Right? 50 billion Vietnam dong. Right? Any kinds of business which turnover is less than 50 billion Vietnam dong, that's kind of business you will file a tax return in relation of value added tax every quarterly. All right. So 30th, I mean, the submission will be 30th of following following quarter, right? Following quarter, 30th day of following quarter. So like it means it is giving them like 3 months, right? 30th of the following quarter. So it's going to be like 3 months time period. But however, in the normal kinds of business, it's like it's 28 days. So that's mainly the tax period. Next one is the, um, of course, because it's in Vietnam, so all the payments in relation of tax, no matter VAT or any other kinds of tax, all the payments will be made only in Vietnam dong. Right? So all kinds of payments will made only in Vietnam. Whatever penalties or whatever tax payable liabilities, whatever, will be made in Vietnam. Right? And next, and the last one is uh, offsets. So if you have any kinds of uh, tax refunds which caused from the previous period, right? So any kinds of tax refunds or tax payments arise, that will be offsets for the next month, right? Next month period. Next month period. So any kinds of tax refunds or any kinds of tax obligation arise later because of some causes or some other kinds of declarations. So all these kinds of tax refunds, if tax refunds, it will offsets with the current period, the previous tax refunds, or if any other kinds of tax obligation arise in the previous period, but we recognize or government recognize in this period, that will be added to the current tax payable or current tax obligations, right? So that's all about your topic 4, part 2, right? So we stop here. So in our next week, so when we're gonna have a Zoom session, in that session we will discuss about part 1 and part 2 both. So make sure you watch both parts before you join next week Zoom session. All right. So we stop here. So I'll see you next week. Thank you.